focus to SBI Cards because the management met certain analysts. What are the key takeaways and what's the commentary like? Hersh is joining us to tell us all of that.
Right, Anisha, a couple of positive, couple of negatives there. Let me quickly take you through that. The first piece is that you have spends, which is looking strong. That's the commentary coming through. They believe that travel spends are good and healthy, but overseas spends seeing a bit of a drag yet to fully normalize on that count. We are also looking at moderation with regard to fuel as well as departmental store and grocery spends, especially on the back of that 2,000 rupee note withdrawal by the RBI. Not much of a surprise. Let's also look at what they are looking in terms of market share. They're continuing to focus on that particular piece. They're looking to both maintain as well as improve on that count is what the management has said. On the negatives front, you're looking at NIMs, which are expected to continue to compress, which is a problem. 20 to 25 bips increase in the cost of funds is expected in Q1 as well. And even with regard to credit costs, there seems to be some amount of pressure coming in on the back of vintage accounts, and that they're still trying to resolve is what SBI Cards has said. They believe that credit costs in Q1 will continue to stay elevated as vulnerable vintage accounts cleanup continues. They are also looking at competitive intensity moderating. That's a positive again. And they believe cost to income will remain at the 58 to 59% band, which is a positive because 60% plus was where it was for a better part of FY23. Credit card integration with UPI, they believe, should be a positive and should act as a further growth accelerator. BOFA has a buy with a target price of 1,030, which is roughly a 10 to 12% upside to current market prices.